Producer AB. Hey.
3, 2, 1.
Here we go.
Welcome into the open where we get technical. You should have investments in long-term growth. Hey everyone, it is Monday, April 19th. I had to look at my calendar. Boy, this month has flown by. Welcome to Get Technical. I'm Neil. As always, we've got producer AB with us on the intro. Hey guys, today I want to talk about Apple stock because it's been a bit of a laggard compared to the other big names that have been driving up QQQ and propping up SPY. So let's take a quick little looky poo at that. And I promise that I'll never say looky poo again. Sharing my screen for y'all. Everyone, let me know how you're doing. Let me know if you're feeling good on a Monday. Wipe that sleepy out of your eyes. We're going to talk about Apple. I want to know what things look like for Apple stock. All right. I think Apple stock has been getting ratted around. Why? Because they haven't come out with anything terribly interesting except for rumors and a new chip that they released on prosumer laptops. All right. Lele, Muhammad, 13, my people, thank you for joining us today. And everyone that's watching on YouTube, welcome. Hit that like, hit the subscribe button. We're going to talk about Apple and try to forecast into May. What we know about Apple. It had a little bit of a failed breakout here previously. I was ready for this. I've mentioned it before. I got a little toasted because my timing sucked. I was a different person. I was younger. I was dumber. And I expected a breakout here, and I bought options like a fool with an early expiration date. Not the way to play it. Don't do that. I'm a different man now. I've changed. I promise. So let's take a look at Apple today. All right. Let's not focus on the past. I want to look at the here and the now and what the potential looks like for the remainder of April and into May. I think Apple right now is looking like a snack. I also think that it's going to hit a little bit of a consolidation phase before it starts to get a serious pop. And I'll show you why. Looking at the daily on Apple, it's very clear that we had a reversal pattern here. All right, I'm not using any indicators, just looking at price, taking a little look at Apple. Everyone smash the like if you're in here. Everyone smash the like if you're feeling great on a Monday. And if you're not feeling that great, smash it anyway. It really helps us. No, I was not raging this weekend. No, I did the opposite of rage. I'm not a nightlife guy. I'll tell you what I got. I'll tell you what I did. I did something crazy. Absolutely crazy on Saturday night, and I'll tell you what it is if we can get the likes up to at least 100 on this video. And it might just be the reason for these voice cracks. I'm also rotating out of coffee right now, so I'm a little bit funky. I'm drinking G Fuel, which is like powdered energy drink. So at any rate, we've got this nice little pattern that we saw, reversal on Apple. This was the entry point right about here. Why was that the entry point? Well, let me draw my sloping line from this high point, pivoting from our upward trend to our downward trend, to this pivot point on this double bottom where I've drawn both ass cheeks. All right, so let's go. And sorry, butt cheeks. If you're at work, I know that some of you guys work in very orthodox workplaces, and I'm sorry if you have the speakers on. But that's what they are. That's what they are. And you can see the breakout, the entry was right about when it broke out of that sloping line of resistance, ceasing to be a downward trend with sloping line of resistance and becoming an upward trend with a sloping line of support, which can be drawn. I don't want to get too messy, but it would look something like this, right? A little something like that, little, but that gets confusing. So I'm going to delete that. I don't want too much on this chart. I'll leave the booty. The booty stays. All right, so we're looking at Apple. Is it a buy? Is this going to be a money printer that you can let some money sit in for maybe a month or so? I want it to be. So now I'm just looking to confirm my thesis, to confirm my desire and make sure, because I let the prices let me know I don't I don't invest on hopes and dreams. Number one, we're hitting our resistance right about here. Interestingly enough, if I pull up my volume profile control indicator, rather, you can see this red line is where the majority, the highest concentration of buying and selling is occurring at $134 at about 88 cents. So I'm going to go ahead and save that line to let me know that every time I'm around that, it's going to work like a magnet. Whether you're trying to go up or down, that line is a magnet that's going to draw your price action in. Now I'm going to close my volume profile. The next thing I'm going to do is turn on my 50-day moving average, because right now the screen is a blur. Give me a 1 in chat if you cannot see the screen clearly right now. BioNoob, that's nice. I might try that. Give me a 1 in chat if you cannot see the screen, and I'll reset everything. You guys are missing out on a lot of good stuff. Okay, so Scott can't, Lori can't, Clyde can, JJ can. Let's go ahead and okay, so it's a blur. It's a blur, guys. Thanks for letting me know. Let's go ahead and remove this screen share. Hey guys, happy Monday. Mondays, am I right? Sheesh. Yeah, it's probably YouTube quality. Thank you, Brandy, for being the voice of reason. Yeah, definitely check your YouTube quality settings. The little gear on the bottom right, you can set it to always be like 1080 or 720. A lot of times it will automatically set something based on what it perceives as your bandwidth limitations. Okay, guys, I'm going to share my screen again. All right. So what I just added after pointing out, number one, that we had the sloping line of resistance that we broke through on our double bottom reversal pattern, returning to an uptrend, is that another big moment for a stock like Apple, and investors are watching for this, you will see more money come in, is a break above the 50-day moving average. All of you, I need to see 30% returns or more in a single trading day or it's not worth it types of folks who also on the other side of the coin are getting burned. I mean, face it. X is getting hot, so let's talk about steel too. But I just want to talk about Apple really quick. You guys might not appreciate one of these older school indicators to use, and I really think that you need to have this on the ground floor. Good, Scott. I'm glad you can see it now, man. I think you need to have this as one of your tools. This is the tried and true. This is like a hammer. Got to have it in the tool set, even if you got that fancy Makita 12 volt with the little hook that you can hang on your belt, walk around your apartment like you own the damn place, because you do own the place, and you're ready to hang up some stuff, some shelves, like this one behind me. See that one? It's crooked, and I'm not changing it. Because the memory of my first time using my new Makita 12-volt battery drill, and the one that does that with the extra power behind it, I did that into the plaster. It's not drywall, it's plaster. So it blew a big old divot into the wall that you can't see right now. I'm hiding it behind that box with chess, the tic-tac-toe / chessboard. But it's memories, all right? So everyone give me a 1 in chat if you have an emotional connection to your power tools. Give me a 1 in chat. Anyways, yes, I feel a little bit like a cowboy walking around my apartment with a power drill, just looking for a cupboard to tighten up. All right? I love a shaky looking cupboard. Invite me over. I'm a great guest. I'll come over with both the drills. At any rate, let's get back into it. Looking at Apple, 50-day moving average is one to watch for these long-term holdings. These are things that a lot of folks like, yes, smacking the one. Thank you. And slap the like while you're at it. Why don't you? Apple is one of those stocks that every good portfolio, probably for the past 3 years at least, has had. All right. So we're looking at this like investors, like longer term position traders. 50-day moving average, breaking back above it. Signs of health, guys. So I am bullish on Apple overall. one thing to consider that is a counterpoint, and you will see this if you're searching around for news on Apple, is that the recent rise coming out of the reversal, if you look at my volume, this yellow line above my volume is the average over a trailing 20-day period. The recent volume that has gotten Apple here has only had one above average day, and that was a very explosive candle. I mean, that went from 129.5 up to 133. Big day for a stock like Apple. But we're at this point of control. My take on Apple is that when we see a solid break above this previous resistance, we can start to get really serious. I have no problem entering Apple right now, though, as long as my stop loss is about 5%, 5 to 8%. I keep it tight, 5 to 8% below the point of control, which is 134. I am bullish on the stock, and let's pull out the fibs. And bear in mind, right now I'm looking at the daily. Now I want to look at the weekly. Let's look at what's really going on with this thing. And yeah, I know you guys might be getting bored. You're like, hey, Apple doesn't mine Bitcoins. Apple doesn't do anything like super trendy right now. They don't have one of those choker necklaces with a little lock on it and have a TikTok profile. Tim Cook doesn't wear one of those choker necklaces. But guys, Apple hears you. Electric vehicles, all right? So Apple is, in my opinion, charging its battery. So we're looking at this on the weekly, and what do we see? Let's get our little arc. Lovely little turnaround. Breaking above that point of control. Let me get rid of my hand-drawn booty. And we've got our low down here at 115. All right. Let's treat that point of control like our neckline and do something additional. Let's use our Fibonacci extension and go to the previous high. This is on a week candle of about 144 and go down to that low right there at the bottom of our little rounding situation. All right. And we got some nice lines. Lovely lines lining up just about with that point of control. Now, remember, the point of control, it varies based on which time period you're looking at. And I was just looking at, I think, the last 2 weeks. So this being as close as it is a good indication that this indicator is also a helpful guide. So looking at Apple, a break above the line that it's broken above already on the week solidly is a very bearish indication that you can start looking to target 138. So we take this step by step. So from its current price, that's a profit potential of 2.71%. And then upon a break above 138, you're starting to look at another 4.51%. And then the big question is, can we break out of that previous high? Can we do it? Let's get rid of some of these lines. We've still got our 50-day up. We've got our Fibonacci up. Can we get to that previous high? There's a couple things that can happen here. Number one, this may be treated like a potential cup with handle forming. My thesis is that we're going to get a little bit of resistance right about here, right about 138, and we're going to get a little selling off. And that will probably take us back down to the point of control. So this is what I think. This is my forecast. This is my opinion. This is not trading advice. This is for entertainment. Whatever you weirdos think is entertainment and educational purposes only. I think we're going to come back down to this point of control. Like I said, it's a magnet. And then we're going to do a little rallying to get past that point. All right. At that point, that's when you can start looking for a much bigger price target above that line of resistance. Something between 175 and 162. So that's Apple for you guys. All right. So I got my tweet out really late today, so I don't know if any of you guys responded to it. So let's go over to Twitter. Let's go to Twitter. 8 responses. Did you guys see this new one? This is a new piece. I made an NFT out of this. We got Spencer Israel with ponytail. Oh my God. It's my allergies, guys. I promise. Sorry about that. Elbow cough. Elbow cough number 2. I'm human. So this one got some responses. This was if you guys are followers of the strat, one person pointed out that this was a nice 2-2 reversal on Spencer's face, Spencer with ponytail. And then also, I am trying to get, if you guys know Triple D Dennis Dick from the pre-market prep, I'm trying to get him to actually purchase the NFT. So I did mint Ponytail Spencer edition number 1 as an NFT. It's available on OpenSea. I'll drop the link in Slack if you guys want to bid on this. So there's the link. If you guys want to go ahead and bid on Ponytail Spencer number 1, that's available for you. This might be the last one, so get it while you can. All right, so now we're looking for people's picks. Let's go. Here's my stupid picture. Here's the thread. Am I shamelessly promoting my Twitter? Yes. Yes. All right, my man, Hide the Pain Herald wants AMPG. Let's take a look. See what's popping. AMPG Amplitech Group. Ooh, got a little green action today. A little green action on low volume though. Guys, I'm so embarrassed. You know what's really going on? I have bad allergies and I have asthma, and I haven't had my preventative medication, Advair, for about a week because I can't make the time to get to the pharmacy. It's messed up. At any rate, what are you doing to me? What is this? We're looking at the 1 week. I mean, might as well stay on the 1 week. So super broad base. Super broad base makes for explosive moves. As you can see, already happened. All right. The wider the base, the bigger the space. So let's go ahead and delete all that stuff. Delete all my drawings. Yeah, give me a 1 in chat if you want a Jason Jason NFT, whatever you call it. He'll probably ask for a higher percentage. That I can guarantee. Why? God, it's a paintbrush tool. It sometimes plagues me. All right, so looking at the daily, this thing's pretty wonky, isn't it? You're probably watching for the bounce, aren't you? If you're looking at AMPG on the daily chart, you're probably watching for the bounce. This crazy gap already filled here with the previous price action. One way to look at this is that this could be a breakdown pattern. Because what did I say about the 50-day moving average? It's below it. However, the stock is under $10 at the moment. So the 50-day, it's gonna cross above and below the 50-day a lot. It's not gonna that's more of a blue chip, mid cap, large cap kind of thing, where the 50-day is very helpful, or at least a stock that has a lot of participants. And you can see that we've got below average volume, so it's going to be hard to get some really big moves here. At least today. So let's get our fib tool out and do the thing. Let's do the damn thing. Let's take a look at it here. Huh. Okay. Pulling out the Fibonacci. Oh, it's down here. Going to the previous high down to where we seem to have found support. I'll actually use this low on the wick. This is a little bit far out. It doesn't need to be that far out. And you can see that the price action is obeying this. You can see that the bodies of these candles were kind of magnetized up to the 50% line on our Fibonacci retracement tool. And then you can see that the body was also kind of holding support on the 38. Well, we broke down. Body lining up pretty well at the open of this daily candle here at the 23. Line our Fibonacci, and then we get to our bottom, which I set. Number one, this line of support based on price history, which is this low right here, and I bet you if I turn on 4 hour, if I turn on 4 hour, we'll see that this price level shows up again Let's go ahead and go back to 1 day. Or wait, what the hell? Yeah. Mondays. At any rate, you're looking for the bounce. I think if you start to see confirmation of an absolute bounce, which means a couple things, I would pull out some indicators, and I would be looking for, number one, increase in volume. You can see that we get it. When this thing increases in volume, it goes way above average. This thing is like quadruple the average, or like 5 times the average on April 13th, and that's what got this crazy wick. So you're day trading this stock for optimum profit potential. That's a fast entry and exit. So looking for a bounce, and again, we're looking at the daily. We can go zoom in a little bit. Remember to give me your tickers and time frames for these, so I can know exactly what you want to see. But you're looking for a bounce with a surge of volume, and something tells me these other indicators, like the MACD, they're not fast enough for you. I don't think they're going to be fast enough here. I think you'll get that little curl after the bounce has already started. Thereby, you will have lost a little bit of your profit potential. But I think if you're looking for that bounce, you want to see that volume surge, and you can look for about 23%. I mean, this is one of those stocks you're going to be in and out quick. I hope you got the right brokerage to go fast, and you know how to use your setups. So you can set your target price. You can really quickly set your stop loss. Let's go ahead and pull on some moving averages here. Yeah, don't really tell us much, except for, yes, this stock is absolutely below the watermark. These are the Fibonacci levels. We learned these from Robert Roy. These are all above the current price. So this thing is just below the watermark right now. So it is a rat snack, not by complete definition, because we want a broader base for a true rat snack. And I think what you're hoping for is more of a V bounce, which just might happen given the volatility of this stock. Another thing that we should draw here, stupid paintbrush, let's use our line tool. Can draw something like that. If this thing takes a little bit longer, the cross above the 23 line on your Fibonacci extension may concur with this line of resistance. If the stock is really going to obey this curve, this line of resistance, which it might not because it's more volatile, but if it does, you can use this line as a buy signal. But right now, if you're just looking for the bounce, baby, watch for that bounce, baby. You could even do something like, man, let's go down 10 minute. Okay, that's way too spotty. I am not a good resource for this because I don't trade stocks that are that spotty. All right, what's up? Let's go to the next one. So that was AMPG. We got that twice. Kolb and Plain Trades. Which chat room are you in? If you're here, tell me. I want to know which chat room is talking about this stock. I'll wait. Come clean. Let's look at X really quick, yeah. Always. All right, so your man... I wish I would have looked at this earlier. Anyways, I'll trade it on a close. All right, so let me delete all my drawings. So another shout out to Miles, Captain Miles, for pointing out that these impulsive moves are usually an average of like 45-50% moves. So far, this little reversal that we got right here is leading us toward... So let's say if you were to enter at the low of this candle, so far a 10% increase. If you were able to stomach that big sell-off, or otherwise sell at the top and then purchase at the bottom. So this is looking like just a great swing trade in a great sector. Really quick, let's just look at metals, XME, and the performance is there. Metals are there. My drawings are already on this thing. My take on metal is that when we get above this point of resistance, which is right about here, you're going to target this upper line on our channel. All right. And that's coming out of this little descending triangle. So this is an ETF that is heavily driven. Excuse me, burp. Excuse me. Heavily driven by X, the steel. United States Steel Corp. So for this one, I think absolutely fantastic if you entered today. Absolutely fantastic. It broke above this previous candle. We're looking good on this thing. Let's get our Fibonacci levels out. From the top to the bottom, look at this nice little double. It's almost a tweezer. This is almost categorically a tweezer bottom, but this body on this candle isn't as large as the body on this one. And to illustrate that, tweezer bottom pattern. There are a few different interpretations of tweezer bottom, so you get like a lot of different images, but this is what I'm talking about. This one here on the left. And so this is what I mean. That's a reversal. So if you see 2 day candles, it's really day candles that people tell you to watch for the tweezer bottom. That's your V for Vendetta. This is a cornerstone of your V for Vendetta V-shaped reversal. God, I'm sorry, guys. And you can see that our wicks line up here, but we didn't quite get the body. Nonetheless, it worked. That's something to watch for, guys. Perfect twins here in terms of the wicks. And then we can see that this is obeying our Fibonacci lines by getting the open right at our 38, dropping down. And then now that we've broken above our 38, we're targeting that 50, baby. We're targeting that 50. If we close above 38 today, I will enter because I love the stock. It's very... I don't want to say predictable, but it seems to obey indicators that I understand. So it fits my trading system. And so if you guys watch the show, you should sort of understand that. So I really, really like United States Steel. I really, really think it's a buy for me with a solid close, which it looks like it's going to happen. Yes, I'm going to give up some profit for sure. Like for sure, I'm going to give up some percentage gains because my trading system is that I work all day. So I'm looking for swing and positional trades based on solid body closes above the point of resistance at the close of the trading session. So that's around 3:45. Yes, I have extended hours. So sometimes if I miss it, I'll do it after 4 p.m. Eastern, Detroit time. So at any rate, this thing is looking really, really healthy. It looks like it's on par to do what we need it to do, which is to continue on this sloping line of support back up. And if it does what it's supposed to do, or if it does what we in theory believe it will do, it will break out of this little pattern that we have, which is a big old cup. So let's draw that. We're looking at X here. Sorry if you guys tweeted at me and you... Looks like no one has X. All right. We'll get to it. We'll get to it. We got time. We got 1 minute before our guest comes on. We've got Chris here again by popular demand. All right. So let's get our arc tool out. Get this out of here. What the hell was that? Nice little cup with handle. Very, very picturesque. Very textbook cup with handle. Drawing our handle line of resistance on top of our support and doing something like that. So from this wick, you could see that this was a nice entry point here, conservative entry point. The other entry point with this cup with handle would have been when you started to see this pivot and you would have targeted this handle once again. So this is the pivot to this wick on March 18th. And you may have entered for ruler tool, please. For this trade, 22%, goddamn. And then you may have entered more conservatively or piled in more if you're on the first trade after break above the candle and gotten in for, let's be conservative here for an additional 14%. Dang. Why are y'all looking at these chat room stocks? Come on. Predictable income, money being made, not bets. All right, rules, structure, order, order in the court, people. God, you guys are wilding out. There's such a body of wisdom to leverage that new entrants to the market are completely ignoring. For yes, it's not explosive. No, you're not going to be able to take a pic of like, bro, I got 45% gains on this thing, and then send it to like all of your college friends. No, that's probably not going to happen. But you're going to make money consistently over time because you're protecting your capital with more conservative entries and tighter stop losses, and getting more wins over time instead of betting stuff and getting a huge trade one day and getting absolutely owned the next day. That's just my take. All right, off of my soapbox. So we are looking for resolution of this cup with handle, even though we have dipped back down. See how this handle has served exactly as support for where we got on the bottom of this fib level. This thing is following classic price structure. This is what we want to see, not just some chaos with little spicks and spacks of candles for some weird stock that someone told you about in a chat room or you saw trending on Twitter or something like that. I know it's fun, and it's fun to gamble with those a little bit. I'll put like 10, 20 bucks on something like that, and if it does something crazy, I might go a little bit crazy. Don't get me wrong, but that's not the core of how I make money trading. And it's not the core of anyone that's been in the game for a long time. All right, so okay, I said I was off my soapbox, and I'm definitely off it. Now let's look at our profit potential. Cool little trick. You can use the Fibonacci extension tool for this, where we go to our left cup down to our, actually, hold on. You would use this pole. So you can use your impulsive move up to your left cup, down to your low. And you can set a price target of 161. Now let's see how that lines up with the depth of the cup added to the neckline. Little bit lower. So I think you got 2 price targets here. For steel X. And we'll see. So you guys that tweeted at me, we'll see if Chris can get to some of your picks. So this is 3350, a nice number to target. These are what I'm going to use to trade it, and I'll let you know how it goes for me. All right, guys. It is now. Yeah, John, I have more than $20 to throw around, but I'm an aggressive saver. I want to retire early, guys. I want to retire at like, I don't know, when I turn like 25. Yeah, I think that's a good year. So I'm trying to make smart conservative trades rapidly. Okay, Miles, what's up? I mentioned you a couple times for steel. Good morning. Dog with toupee pattern. We'll get to that. If we get this video 250 likes, we will disclose. And this is an insider thing. A lot of you guys, if you don't talk to hedge funds on a regular business, I just had dinner with a couple hedge fund guys. It's sort of like our inner circle. Charlie Munger, Warren Buffett showed up for like a minute. He just had a Diet Coke and left. And Mia Khalifa was there too. She was just hanging out. She's a laugh and a half. Yeah, we were there talking about Doge and stuff like that. But then we started talking about dog with toupee, and I got permission. I will take the secret pattern and share it with you guys if we get this video 250 likes. So if you're watching on the YouTube recording or if you're watching live, 250 likes, rare dog with toupee pattern coming up. All right, so now it is my great pleasure to bring on our good friend Chris, who, by the way, is now going to be a regular guest on the show by popular demand. So if you guys don't know him, lift up the little hatch where you get out of the rock that you live under, poke your head out, and listen up. Chris, how's it going?
Very good. Yourself?
Wonderfully. Absolutely wonderfully. I'm switching off coffee, and I'm now have a powdered energy drink.
I was looking for a wig or something like that. See if I can grab my dog and put the wig on so we could have I could show you an actual dog with toupee in live. But he's sleeping right now, so I think he'd be grouchy about that.
Yeah, we'll let him sleep. And you know what? I mean, we don't want to piss off the inner circle of secret trading strategies. So I don't want to give away the dog with toupee pattern.
Super important. Yeah. Have they taught you the handshake yet? Uh-oh. Looks like your web froze. Dun, dun, dun.
Am I back?
Yeah. Okay. You're back.
No, the secret handshake is a lot to remember. So and it's like I can't practice it with anyone because then they know the handshake too. But yeah, so I'm working on the handshake, and then once I get that, I get the ring. with the eyeball on it. Yeah, I can't wait.
Yeah, and the skulls. Yeah, I hear you on that.
Yeah, that's gonna be cool. So Chris, great to have you. I'm so excited that we talked about having you on as a regular guest, because I straight up steal the way that you talk about stocks nonstop, because I understand it, and it makes it much easier for me to navigate things that otherwise would just look like a bunch of noise.
Yeah. Yeah. So we're going to, I'm glad you mentioned that, because we're going to actually get into a combination of some of the technical analysis, the price action tools I use. But this is a regular segment on options. So what I'm thinking is that I would like to start with just kind of looking at the meta approach, the overall approach, what's going on with SPYs right now. And then I have about 3 or 4 stocks I want to get in. I actually would like to get into the XME play that you were talking about, if that's okay. So some reason I don't see it on video anymore, but if you want to just let me keep rolling with it, I will roll with it. Are you still here, by the way? Did you get pulled off the air for talking about the secret handshake?
I think this is producer AB. I think Neil's video audio cut out for a sec. So if you just want to run through SPY, then we can go over to XME real quick, and Neil be back in any sec.
All good. All good. Okay. So looking at SPYs here, what is kind of interesting to me is that if you count from here all the way up to here, you're talking 14 out of 15 bullish closes on the daily chart. And the part that's really, really interesting to me here is this. So what's going on here that this volume is all of a sudden so precise and rote? Like, you're seeing very little change in positioning here. I haven't been able to quite figure it out, but the fact that the volume is almost like identical tells me that there's some sort of like hedging or unwinding process going on here. So with that being said, looking at what's going on in SPYs is in kind of this positive gamma territory right now. If the market is net long options, you're going to be positive gamma. If the market is net short options, you're going to be a negative gamma. And positive gamma matters because when the market's in a positive gamma territory, volatility tends to be much more contracted. And that's what we've seen. It's been steadily gaining, but these are not big candles. You get a little bit here, but most of these are small candles. And so we're not in this like wide ranging candle environment due to the options positioning. So if you're going to be trading SPYs, don't expect big rippers on the day. And because volatility tends to be compressed in positive gamma, instead of trading breakouts, the recommendation based on option positioning is to be trading, pullbacks on this right now. So if we happen to get a daily sell-off that is mild, then I would look to be a buyer on dips. My first area that I'm looking to get long on dips is 410. So this is kind of my meta-analysis of what's going on in the SPY. And I'd like to get into Roblox. Have we lost Neil, or is Neil taken out for good for talking about the handshake? He's back.
What handshake?
Something happened. Did they give you the tap on the shoulder?
I don't know who they are. I don't know anything about it. I think let's just put on a good show and talk about traditional approaches to trading.
Fair enough. Okay, so being that this is about options, so I'm looking at Roblox right now, and what I'm thinking right now in terms of what's going on with the option space in Roblox right now is we have roughly a third of all the gamma available on Roblox right now expiring this Friday. Roblox is a heavily traded stocks from an options perspective. And my approach to trading options is very straightforward. Dealers and market makers are the heaviest players in the option space. They are constantly hedging. If a client gets long Roblox, then they have to hedge that position. And so that means that they're short Roblox. That means they're going to have to hedge that with options or futures or whatever it is. So depending upon what they're trading. And so for me, dealer and market maker positioning, which is often represented in open interest and gamma, is really kind of telling me where the dealers and market makers are positioned. And so when I look at the open interest on Roblox right now, we have about a third rolling off this Friday. And it's a non-monthly OpEx. We just had April OpEx. Generally, that wipes the slate clean on the options board. And then that means that traders are going to start building positions for the next month. But we already have a third of option positionings expiring this Friday. So that means Roblox is something that's heavily traded on a week-to-week option basis. And since right now we're looking at roughly on the open interest 150,000 calls to 50,000 puts, that's 3-to-1 calls. If a third of that is rolling off this Friday, and most of that is support, 3 out of every 4 option plays are long calls, well, then some of that support is going to be rolling off this Friday. So if that makes sense to you, does that make sense, Neil? Yes, no?
Mm-hmm.
Okay. It's very convincing.
Just keep going, man.
So I'm looking for actually resistance and potential fade plays on this one here. And so what I'm going to look on this one here, if I look at this kind of 1 hour chart, we have some resistance here around 80, and that being a major strike. And then we're going to have some resistance heading into around 83. So if I think that this is going to fade going into the week, I could do a wait for a pullback up to 80 or 83 and do a bear call spread. That would be getting long options. And so then I would just pay my premium and I would have no more risk in the play. I either make profit on this or not. So I could do a bear call spread with a strike at 80 and then maybe target like a 75. So it'd be like an 80-75. Or I can wait for a roll up to about 83 and sell the 83 and then maybe buy the 77 or 78 as one potential play. If a lot of the options are rolling off this Friday, then I would want this option, this bear call or bear put spread, to extend to next Friday's expiration, because I would use this Friday's expiration, those roll off, that creates some pullback pressure on roadblocks. So that is option 1. If you want another alternative play on that, and you don't want to get long options, if you want to receive a credit, then I would look to maybe sell the 80 and buy the 85, or sell the 83 and buy the 88. That would be a bear call spread. So both of these are bearish to slightly neutral trades. So that would be the other play on that, would be a bear call spread. The advantage of that is you get into the position for a credit. The disadvantage is you have a little bit more risk potentially in the play. And especially if it rolls up past your upper strikes and they exercise it, then you can be technically short. So those would be the 2 plays that I'm thinking on Roblox for right now. Any questions from the audience before I roll into that?
Mostly just jokes. So,
Mostly just jokes. Fair enough.
Like I said, I thought a bear call spread was a Tinder date with a furry. It is. It's used in both circles.
Yeah. Okay, so Disney is the next play on this one here. So Disney, I'm kind of more neutral. Long-term, I'm bullish. It's hard not to be long-term bullish on Disney, but I'm a little bit neutral on this while we're inside this kind of structure. And when I look at Disney in terms of what's going on in open interest, so right now Disney is still more long calls than puts. You got roughly 600,000 calls that the market has in open interest and roughly 450,000 on the put side. So slight imbalance there by about 1.25 to 1. And so with that being said, the thing about it is with Disney that's interesting is that there's not a whole lot of open interest expiring this Friday. It's the next monthly out. So it's 1 month from basically it's May 21st. So if there isn't a lot of open interest that far out, and when I look at on the call side, the top open interest calls is 200. That means nobody's really thinking that Disney's going to get beyond 200 by the May expiry. And on the put side, you're talking the low end put is 180. So it's a very tight $20 range in terms of option positioning on Disney. So to me, when you have a tight range like that, but you only have a mild amount of calls over that, to me, it suggests that this is going to be not a gangster ripper until we get to earnings, basically.
Okay.
So earnings comes out on the 10th, the week before, about 11 days before it expires. And so with that on the 13th, yeah, go ahead,
Chris. So sorry if you've already explained this, but when you're just looking at like on your brokerage, the options chain data, right?
Yes, and then you can also, if you want to get more in-depth data, you can go to OPRA. That's where they disseminate all the options data, basically.
Got it.
They're collecting all the options data. You have to sign up for a subscriber contract with everything like that, and you have to find a way to interpret that data. But those are your 2 options. If it's with the brokerage, it may not include all of the data. It might just be broker specific or whatever information they're getting. But through Oprah, that's all of it. So those are your 2 ways to get the open interest data and what's going on.
Okay, cool. I'm dropping a link to that in the chat if anyone's interested in digging deeper there.
Yeah. So with that being said, you got a narrow range of options going on in Disney, and there's not a whole lot of, option to open interest expiring this Friday or the following Friday. So that means that I'm expecting this to kind of stay within the confines of that range until we get to the earnings, which is on the 13th. So I think this is a chance for neutral plays on Disney. And if the range is defined as, say, 181 or 182 to 200, then you can look at iron butterflies. Let this float into the middle of this range and play an iron butterfly in this. So you could, maybe around 190. That would give you roughly $9 to the upside. So you can do like a 190, 200, and you can do a 190, 180. And so that means that if you were to do this, you could probably get in for a pretty good credit. And as long as this stays within the confines of this range, then you make money. If it breaks outside that range, then you're exposed.
Mm-hmm.
So that's kind of what I'm looking on this one. I'm looking for more of like a neutral type play on Disney, at least for expiring this Friday, next Friday, anything before leading up to the earnings, which is on the 13th. Any questions from the audience at this time? I'm not logged in, so I'm not seeing everything right now.
Yeah, no problem. So again, mostly it's a very immature group this morning. Mostly jokes. I dropped in the definition of an iron butterfly, guys. If you have any questions about that, Chris is if he knows the answer and he can teach it to you. So if you have questions about these options spreads or these different ways of trading options with more than one leg, drop them in the chat. Otherwise, I think we can keep moving.
Cool. Best Buy. This is one of the more simple plays here. So we had talked, you were mentioning the impulsive corrective that you're doing, you often like to refer to on this. Best Buy is pretty straightforward to me. I am bullish on Best Buy, and I'm expecting a break out of this. So we have this large corrective structure at the top here. And so, after a big impulsive run, you have a large corrective structure. If it was a narrow corrective structure, if it was like really tight like this, then that would mean very little pullback in the market. That means very little counter trend players in the market. However, we do have a little bit wider corrective structure here. That means that there's a fair amount of buyers and sellers in the market. And the buyers are coming in between 105 and 100. And the sellers are coming in roughly between 119 and 124, 125. So normally I would expect to play both sides of the range. However, we are seeing as we start to look in these more smaller time frames like 4 hour. So when we look back at every time we've gotten to this kind of 119, 120 area, the sell-offs are pretty fast. This one went down to 104. This one went down to about 110. This is the biggest overshoot, went down to 110. You can see they're all very fast. But then this time we get here, and let me zoom in so you can kind of see this. You see how the pullback is much more shallow and it's corrective, and then it finds kind of a bid, a very stable bid here, and then it reattacks. So this is the first time we've gotten to 120 and not floated all the way down to like 115, 110. That's the weakest pullback since this entire structure has been manifesting. And it tells me that the bears are starting to lose control because they're not punching back as hard as they used to. That suggests to me changes in the order flow. So there definitely was a consistent bid around 114, but then look at this last pullback, and let me delete this here. That's corrective. This is an impulsive, corrective, impulsive, runs into a wall of orders there, and a corrective pullback here. So I feel like BBBY is setting up for a breakout. And while you could definitely trade it long, the stock itself, trade the underlying itself, if you want to play this via options, I think the best play on this is a bull call spread. It's a very simple two-legged trade. You basically get long at the money calls or maybe slightly out of the money calls, anticipating the breakout, and then you sell further out of the money calls. Why would this be a good play as a potential option right now? Well, since the pullbacks have been weak and it's not ripping a whole lot lately, implied volatility is going to be low. And so if implied volatility is low, that's a great time to get long options. If implied volatility is high, that's a great time to be selling options because you get more premium, and that when the IV contracts, you make money on that. So if we're going from a low IV to a potential breakout, then IV is going to go into a potential increasing environment. So we have two ways to profit from this. We can profit from IV increasing, and we can profit from the direction itself. And so when I look at options on BBY, they're pretty favorable right now. Right now, it's really almost dead even. Calls to puts, 45,000 each. So options position is not highly skewed to either one side or the other. And that means that there's a chance to get in options cheap before it breaks out and before people start getting more long calls than they do short calls. So when I look at that, I look at this as a potential for a bull call spread. The current levels aren't bad. You could do like a 120, 125, 120, 130 bull call spread. You can wait for a little bit more of a dip to this 115 area. And then if you want to you can either do like a 115 anticipating the breakout to 125.30, or you can actually do slightly out of the money calls to start with. So wait till it gets to 115, buy the 120, which will be cheaper, and then look for like a 120, 130 bull call spread targeting the monthly expiry in May. So you'd have about a whole month for this to actually manifest the breakout. That gives it time this week to build up a whole new set of options positions since the monthly is just rolled off. So I like this one directionally. I am actually long a bull call spread. We bought one mid-late last week in anticipation of the breakout.
What do you say to folks that are not as well versed in multi-leg option strategies and maybe aren't ready to try one out, but want to seize an opportunity like this? And they're saying, how about I just buy an outright call?
Yeah.
What are they missing out on, or what are the pros and cons there?
Okay, so great question. In terms of answering the question of why not just buy an outright call, totally fine. The differences between buying an outright call and a bull call spread is that with the bull call spread, it'll be cheaper because you are buying an at the money call or slightly out of the money call. You're going to pay the premium for that. But because you're also selling a further out of the money call, it reduces your cost basis to get in. And the way that works out is like this. So if I show you a P&L basically of two situations, this will be a long call and this will be a bull call spread. So here's your break even. And so your long call is basically going to look like this. That's your payout. And it has open-ended profit on it there. As the stock continues to rise, you can capture as much of that to the upside as possible. But you're gonna pay a premium because you're buying at the money strikes or near out of the money strikes on that. And so you're going to pay that premium. Premiums are expensive the closest you are to at the money. With a bull call spread, it's going to reduce your expense because you're also selling a further out of the money call. The disadvantage is that wherever that further out of the money call is, it will cap profit there. So if the stock rips beyond, 130, 135, and you've bought the 120, 130, anything above 130, you're no longer making any more money. So it caps your upside, but it reduces your cost basis to get in. So there are advantages and disadvantages to that. If you are just outright bullish on BBY and you feel like, hey, I'm not ready for, spreads or multi-call or multi-leg option strategies, then buying the call is totally fine. And it gives you the option of, or the advantage of, if BBY keeps ripping and it goes further than I expected, I can continue to make money on this ad infinitum. As far as it goes, I can do that all the way up to expiry. So those would be the differences between long call and long and bull call spread. In terms of when, you had asked another question of like, hey, if they're not familiar with this, what should they do? From my experience in doing hundreds and hundreds of options trades and just really spending an immense amount of time understanding options on a very complex level, my suggestion is in the beginning, only do single leg option trades until you've gotten probably 50 or 100 under your belt. The reason being is because once you've gotten 50 or 100 single leg options under your belt, you're going to have an experience for, a feedback from the market of, okay, how did these work? What environments do they work well in? When would it be better for me to get in for a lesser premium? If I go long calls and cap my upside, you'll have a lot of feedback from the market of when these single legs work well and when they don't. And as you get to that point and you feel like, okay, I've done enough and I'm almost bored with single legs, that's a really good time to then start expanding into double legs. So
I'm so glad you addressed that.
Yeah, and it's super important. Options and any sort of trading skill that you want to build, I always believe in a controlled growth type strategy. Start off with options, just single legs only. Be patient with that. Get comfortable. Once you start to get like bored with it, that's a sign that your brain has pretty much assimilated enough information that you feel comfortable trading any level of single leg option.
Mhm.
And now it's time to expand your skill set. Your brain will let you know. You're just gonna be like, okay, I'm bored. And so that means that you have a stable level of skill in place with single leg options. Then from there, you just go to double leg options. So that could be credit spreads. That can be actual bull call spread or bull put spread. Work with simple two-legged options first. And again, same thing. Get another 50 or 100 under your belt. As you start to get comfortable with the nuances on how you can price those, what advantages and disadvantages they have, then and only then should you start to expand to three-legged and four-legged options. So don't rush into it. Build a base of skill first. Once that skill is strong, then you take yourself to the next level.
Beautifully stated. Chris, thank you so much for joining us on a Monday morning.
Good seeing you. Be well, everybody.
Thanks, man. Take care. All right, there you have it. That's your Xbox achievement. 50 single leg options trades. That means, like, honestly, buy a call, buy put. If you want to get into selling, that's another thing. But it's still a single leg. Get a feel for it. How does premium work? How do you make money? What do changes in price and time transpiring do to your profit potential, your timing? Get that under your belt so that you have a sort of muscle memory for it. And then you can go in confidently. And I think the core message there is don't jump into the advanced stuff just because you hear people doing it. So there's a little path. Get your Xbox achievement, your little badge before going into these. We will have Chris. I think he's going on vacation next week. There's a big meeting at the Bohemian Grove, so he's got to do the whole owl ritual to, secret handshake, dog with toupee kind of thing. But he's going to come back and be on the show with us every Monday, talking about using options chain data to find support, resistance, entry, and exit levels for stocks, and discuss different options trading strategies. So you're going to get that every Monday. So make sure you tune in. One thing I want to point out as we're getting to the end of the show here is we got a contest. Let me open it up. I'm not sure if it's set up right, but you know what? I'm going to if it's not set up right, it's a benefit for you guys. If you want to win up to $100 in Benzinga swag, simply go to the link I'm about to drop in chat. It's also in the description for this video. Up to $100 in swag. I'm not sure. So right now, I think that the entry requirements are lower. It's very easy for you to get a bunch of entries in. Click the link that I'm putting in here. You're going to go to this link, and I think you're going to see my dumb ass face. Let's get this to open up. I promise this doesn't happen all the time. It's just loading. It's just, I had a long night, all right? Sheesh. All right. Well, it's not loading for me. I hope it loads for you at any rate. If you get to a point in this contest where it asks you for a secret code, that secret code, which you can only get by watching the show, ponytail. Ponytail is the code. No, that's not the link. No, that's not it. That was to edit the thing. Brutal. Anyways, it's 10:30. Next up, we've got the Benzinga Pro Showcase. Happy Monday, everyone. This is Get Technical. I'm Neil Hamilton. Happy trading.